The difference between struggling traders and the consistent winning ones boils down to strategy. In this video, I am going to share top 3 powerful strategies that truly works. It has been tested in real market conditions. Watch till the end because strategy number 3 has the potential of completely shifting your trading results. Hello people, welcome back to the FinSpoke channel where we break down the world of trading, money and mindset into simple practical lessons for everyday people like you. If you are serious about winning financially, then you are in the right place. Welcome to the family. Smash that subscribe button and tap the bell icon so you are the first to get notified whenever I drop powerful contents like this. Don't forget to leave a comment below. Give this video a thumbs up and share it with someone who needs it. Let's get into it. Now, strategy number 1. This strategy helps you to scale up your account over time if you understand how it works and apply it. What I'm about to show you works with the price action. If you are conversant with the market, you will understand that the market trends for only 30% of the time and the ranges about 70% of the time. Once it's done ranging or done consolidating, the next thing that it will now break and move either to the upside or to the downside. Now, what this means is this: is the market, if the market is not trending, that it is not moving, then is going sideways, just like this thing that I drew here. If you understand how to trend ranging market, you'll be able to make money even when the market is not moving. And I still say that you can't, because the market is not moving, and fold your hands. What if you don't have any other thing doing? You are just depending on the market. So if the market is not moving, you should also have a strategy that at least can give you breakfast or lunch or dinner while waiting for the market to make that impulsive move. So if you understand what the market is doing here, you will also be able to generate signal for yourself and take position. This is how this strategy works. First, you identify a ranging market. This is a ranging market now. For those of you that don't know what a ranging market is, this market is ranging between here and here. It's ranging. This is 4 hours time frame. So the market is actually ranging. This is an impulsive move. This is where the market moved. It came here and it starts ranging. When it's done ranging, it will either push up or push down. These are just the things. But our major concern is that the market is ranging currently. The next thing to do, now that we have identified a ranging market, is to identify our support and our resistance. This is our support level. These are areas where the market came to and it will bounce back to the upside or to the middle. So this is our support. The market find rest here. That is why you are seeing it here. This is, it find a support here. Now, you have identified the support level. The next thing is to identify the resistance level, which is the level where the price gets to and is likely to fall back or the price is being rejected. And if you look at here, it was rejected here, 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 and here currently. This is Deriv. Deriv is a 247 market. As at the time I'm recording this, the market is on. You can see the price moving. So the market is on, but this is 4 hours. So there's a little rejection here. but the candle have not really closed, shall. Now that you have identified the support and the resistance levels, normally you are supposed to trade with the price action with these pin bars that you are seeing here. You are supposed to actually trade with them. But instead of trading with them, you are going to put another line, or you are going to identify a middle zone between here, the support level, and the resistance level. The market is still ranging at the middle. That is why I put this line. Like I do say, don't mind the lines I put in a chart. Do what resonates with you. Just grab the knowledge, get the knowledge, understand what I'm about to explain. If you look at this market, you discover that there was a rejection here. These are the middle. The market is reacting around this range, this zone. So I put this line to identify where the market is reacting other than the support and the resistance zone. And I call this place mid zone or midline. That's what I call it, mid zone or midline. We want to see what price is doing here and be able to know how to take our position. That's the sense of this. When you are able to put a line or to identify this mid zone, you now discover that this ranging or consolidating market is divided into two: the upper ranging and the lower ranging. So it's divided into two: the upper zone and the lower zone. As long as price is still within this place, within this consolidation area or axis, it's either the price pushed up or the price moved down. These are just the two things that will happen. Either the price is ranging at the upper zone, or that the price is ranging at the lower zone. Here it was ranging at the lower zone. Here it was ranging at the upper zone. So it will keep doing this until it's able to either break this one to move up, or it comes down, break this mid zone, still push down, break the support level, and move down. So these are the possible scenarios here. But for us to take advantage of this strategy, we are going to trade as long as price remains in this zone. Now, this is how it works. Identify the price position. Is the price position in the upper zone, or is the price position in the lower zone? If the price is at the upper zone, just like this, as at the time of this analysis, the price is at the upper zone, wait for it to come closer to the mid zone. And if the price is at the lower zone, you also wait for it to come closer to the mid zone. If the price come close to this mid zone, it either hit it and push up, or it will break the mid zone and move down. If you look at what happens there, the price came here, hit this mid zone, push up a bit, came back to break it and move down to the support level before reversing to go up again. All right, as the price gets to this mid zone, you need to analyze the price action. Once it's getting here, watch out to see if it will break this place with at least one momentum candle. If it breaks it with one momentum candle, it's definitely going to push to the downside. But if it does not, it will go up again. What you are looking for is either one momentum candle or multiple candles crossing down this mid zone for you to know that price have shifted from the upper zone to the lower zone. Now, when price gets to this mid zone, if we see some kind of rejection, look at it here. This kind of rejections, the possibility of or the tendency of price touching here and still go back to the upper zone is always here. That is what I'm showing you here. The price came here and there was some kind of rejections here and it still went up. So if you understand or if you see this, you can easily enter a buy trade and place your stop loss a little below here and take profit close to the resistance level. It will push up, hit your target profit before returning back. Because of what? There was a rejection at this mid zone. So when price did this, it bounced back to go and retest the resistance zone before it started coming down. Getting to this place, it started ranging again, broke this mid zone, but didn't push downward, went back again. I will still talk about what happened here in the next strategy. That is, to them that understand what is happening here, it could be to hurt their stop loss. So when you see something like this, you need to enter a buy position. Put your stop loss below and your target profits at the resistance zone. You need to look at what price is doing at the mid zone before you be able to take the trade from the upper ranging or from the lower ranging. For you to be able to execute this trade, you also need a good broker. This Deriv, I will be leaving the link in the description. You can sign up with them for fast, low spread, and beginners friendly platform, especially for those who wants to test crypto, forex, and the synthetic. They are all in one. So I'll be leaving the link in the description. You can sign up. And if you are getting value from this video, do well to subscribe. Strategy number 2. In this strategy, we are going to use the Fibonacci retracement. This one works whenever there is an impulsive move or when the market moves. Like I said earlier, the market moves 13% of the time and the ranges 70% of the time. So when there is an impulsive move or when there is a movement in the market, usually the market normally retraces. So if you miss the impulsive move, if you miss that move, you can actually take advantage of the retracement move. That's this particular strategy, if you understand how it works. Fibonacci is a tool that is used to identify possible end of a pullback or possible end of a retracement. For instance, if the price, like this one now, I want to use and show you something. The price moved to the upside. Now it gets to this place. It was rejected, pulled back a little bit, pulled back a little bit, and pushed up again. Couldn't break the resistance level, and it's coming down. So if you miss the trade here, you can actually enter the trade somewhere. Another thing is this. There's something I want you to understand. This trade, when it is moving up or pushing up, created some kind of fair value gap here that it has to come back to fill. So to use this Fibonacci, I know that a lot of you know how to use this particular tool, while some others don't know. This is the Fibonacci retracement. Now, for you to use this tool, you click on it, place your mouse on the swing low and drag it to the swing high of that move. I'm not teaching this Fibonacci retracement, but this is what you see. Most times we use this, and this, but that's not what we are going to use in this particular strategy. We are going to reset it for the purpose of this strategy. Follow me as we do it. You go to the settings. Go to the settings of this. Uncheck. You can pause this video to see the ones I uncheck. I am only going to use one. Uncheck 0.38, 382. Uncheck this, 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 and this. So we are going to use only 0, 0.618, 1, and the 1.618 for the purpose of this strategy. These are the ones that we're going to use. So you open your settings and reset it to this and click OK. When you do that, this is how your Fibonacci will look like. This 0.618 is why we are expecting this pullback that you are seeing. This is a pullback, the possible pullback to get to before it goes up again or it push up to the upper side again. Explain what we did here. We first of all find a trend and a retracement. This is the trend. This is the retracement or the pullback. Then the next thing we did was to apply this to reset our Fibonacci and then apply it. Look closely at this. You will see an indecision candle in between. That's a price action candle. So you are going to wait for the price to come down. It will pull back and get to or almost at this level. If the price gets to this zone and the show, let me draw it so that you'll be seeing it. This is a zone now. You just mark your zone. The next thing you need to do is to do a kind of multi-time frame analysis by moving to the lower time frame. We are in the 4 hours time frame here. So we could move down to the 1 hour time frame to see what is happening there. If you like, you can apply MACD. That's a trend indicator, an indicator that shows you the trend or confirms the trend. If price gets to this zone, look for a kind of rejection candle. If price or you see the sign of rejection around this zone, what it means is that price is likely going to push up again. That's the pullback or retracement has actually ended. Now let me quickly say this. Sometimes it will touch the zone, try to push up, came back to retest this zone before pushing up. So you'll be a little bit patient to watch price, what the price is doing around this point, around this zone of this 0.618. Be sure there's some kind of rejection before you think of placing a buy order or a buy limit. Enter a buy position. That's what I mean. Now, you are going to, when you enter the buy position, you are going to apply this Fibonacci again. what are you going to do? You are going to put it from the on that retracement. This retracement, let's assume that the retracement gets to this place. So you are going to put this Fibonacci again to measure this retracement in order to know where you're going to place your take profit. How do you do this? Let us assume that the retracement gets to this place. So what you are going to do now is to do this. We are going to put, you are going to now put from the swing high of the retracement to the swing low. You see it now? So you are going to use this for your target profit. So you set your target profit around this zone. You set your target profit around this zone. That's the sense of this 1 point. Remember that when we placed the first Fibonacci, in order to get the possible end of pullback, we started from where the move started. That is why we started from the swing low to the swing high. Now, when you want to measure for your target profit, you want to check where you can possibly put your target profit, you are going to measure from the point where the retracement started to the point where the retracement ended in order to know exactly where you can target for your take profit. So this is how to use this particular strategy. In this industry, I do say patience is key. If you miss a move, wait for the price to retrace. Once the price retraces, if you are monitoring the trade, you will definitely get something out of the trade. If you are gaining value in this video and you have not subscribed, or you are coming across this channel for the first time, kindly smash that subscribe button, click the notification bell beside it, so you'll be the first to get notified anytime I drop a powerful content like this. And don't forget to leave a comment below and share this video. Strategy number 3. Pay attention to what I want to explain to you here. There are some things that happens in the market that a lot of retailers are not even aware of it. They get to know when the thing has happened to them over and over and over and over again. And that thing, we call it stop hunt. Stop hunt. Now, what I'm going to show you in this video is that you can actually use this stop hunt to your own advantage. But first, let me explain what stop hunt is and how it affects retail traders. In my own understanding, stop loss is a deliberate attack that big institutions launch against retail traders in order to clear their stop losses before making their big move. Let me explain to you with this chart here. Now, look at this case here. I will show you what happened here and what happened here in order to explain what I mean by stop loss. Now, you open your chart and you find the area where price was rejected or where the price got to and is about falling back, which is this area of resistance and also the area of support where the trade or the price is trying to rest somehow before where it found support. There is what these big institutions does. What is it? They know that when you find or when you discover this area of support and the area of resistance, you will definitely place a trade for a buy. You will place your stop loss rightly below here. That's where you place your stop loss. And if you are taking a short, which is sell, you will also place your stop loss rightly behind here, above here, sorry. What this big institution does is this. They already know that there are a lot of queue, a lot of orders at this level. Because there are a lot of orders at this level, there are also a lot of stop losses at this level. What they will do, instead of the trade coming here to bounce up, they allow the trade to come here, come down. Instead of bouncing up, they will allow it to move down. It's a deliberate act. Move down, not always, but sometimes they do it. So when the trade moves, it makes sure that it clears all the stop losses that are being queued up here. When they clear the stop loss, money is being made inside the market. That's just the psychology, understand this. So when they clear these stop losses here, they will still reverse and they move. Let me zoom this thing now. If I move to the lower time frame, let me give this in a mark. You will see this thing now. Let's go to the 2 hours time frame. Did you see? Let's still go to 30 minutes time frame. I want to show you what was happening. This was a sell candle moving down. This candle, when we keep moving, you see that it was actually a momentum candle at the lower time frame. Did you see the candle? Did you see the long candle here? Candlestick. This is where it broke the support level. Move down. Get the knowledge, please. I'll keep showing you. We call this thing stop hunt. It is looking for the stop loss, retailer stop loss, or retail trader stop loss. Look at the trade here. If you still, assuming I'm on a paid version now, I'll still get to the seconds. You see how what transpired. So the trade came here. Instead of reversing around this level, it pushed down and reversed. It did this in order to clear all the stop losses that is being piled up or queued up here. Then it reversed, range a little bit here, still move up. But what I'm trying to show you is what the market makers or the big institutions does sometimes. That was exactly what happened here. Look at where the trade gets to. So between here and here, down to this place, it reversed. It cleared the stop loss of people or retailers that actually placed a buy position. That is why sometimes you say that the market, you got the analysis, but the market came, pushed you out, and still went to your direction. That is what the scenario or what actually happened or transpired. Now, the question is, how can you use this to your own advantage? This is what I do in order to get a high win rate. When I identify an obvious key level like this, then the next thing I do is to find out where price is paying attention to. Paid attention here before it came to this place. Next thing you want to do is wait for the price to come to this level, to this obvious key level, and break it slightly. I will switch over to the lower time frame. So long as it touched at that 4 hours, then you need to know what is happening at the lower time frame. So once you switch over to the lower time frame, find out what the price is doing around that zone or that area. You broke out of this zone entirely before even reversing. So what do you do in this scenario? If you are following it, what to do is to place a limit order below. If the price wants to continue downward, it will pick that your limit order, that's your sell limit order, and push down. Then when you do this, you also came back to place a buy order above this level. If it is a stop hunt, it will come up and pick that your buy order. And if you put a buy order, then you should be targeting the next resistance level, or as you wish. Now, what happens here is this. If you place a sell limit order for the price to continue downward, it will pick your sell order. You don't lose anything. But if it was actually a stop hunt, it will clear the stop loss and reverse. Once it reverses, it will trigger your buy order. So what I'm saying in essence is, you set a buy order above the zone and you set a sell order beneath the zone. Either ways, one will trigger. You won't lose money. If you backtest this, understand it, use your demo to try it first, then you can apply it. Another thing for you to get a good win rate is the broker you are using, are they ready to execute the trade as soon as the price gets to where you place the order? That's why I recommend you use Deriv. Deriv is good for beginners, is good for people that wants to test synthetic, crypto, and forex at the same time. That's 3 in 1. And they are also fast in executing trade. I will leave the link in the description. You can use my link to sign up to Deriv and start trading immediately. If there is any question on that, you can reach out to me and I will put you through. And if you really gain value in this video, please don't leave without supporting by smashing that subscribe button. If you have not done so, tap the bell icon so you are the first to get notified whenever I drop powerful content like this. Leave a comment below, give this video a thumbs up, and share it with someone who needs it. I will see you in my next video.